What is DeFi? DeFi stands for Decentralized Finance. To better understand DeFi, let's compare it to centralized finance, often abbreviated as CeFi. But before we delve into that, let's clarify what finance means. Finance refers to the financial industry and includes the management of money and assets, including activities like investing, borrowing, lending, savings, and more. The terms decentralized and centralized are fundamental to understanding the nature of how finance operates. Before we continue, welcome to Crypto Made Simple, the top-notch YouTube channel for crypto education. In this video, we are going to make the concept of DeFi as easy as a walk in the park. Before we proceed, you'll want to grab a book and a pen. I'd like to use three key terms to distinguish between DeFi and CeFi: control, fees, and speed. 1. Control. In CFI, there is a central authority, typically governments and financial institutions, that control and regulate the flow of money. This centralization can lead to issues such as censorship, restricted access, and dependence on third parties for financial services. These actions are often implemented through laws and policies, sometimes without our awareness. Essentially, they exert control over your finances. However, let's keep the discussion focused on differentiating CFI from DeFi. In decentralized finance, on the other hand, there are no banks or central authorities. Instead, there are smart contracts, which are pieces of code designed to function in a certain way and cannot be altered. DeFi operates on blockchain networks, which are highly secure and accessible to anyone. You can use your money whenever you want and for whatever purposes you choose. It is often said, "You are your own bank." DeFi is built on three main components: cryptography, smart contracts, and the blockchain. If you don't know what these components are, please watch our other videos where we break down this topic as easily as a walk in the park. You might want to hit the subscribe button so that you don't miss future videos about smart contracts. It's time to move on. 2. Fee. Operating in CFI can be costly due to the involvement of intermediaries such as banks, brokers, or payment processors. For instance, many banks charge high interest rates, averaging between 10 to 12% on personal loans. Additionally, transaction fees for everyday expenses can be higher compared to other options. These fees are subject to change, especially if there's an increase in tax rates by the government. In DeFi, transactions are much cheaper. For instance, you can transfer $1,000 with just a $5 transaction fee, which is not possible in traditional finance. What's fascinating about transaction fees in DeFi is that they cannot be changed. This is because they are governed by smart contracts, which are pieces of code created to operate in a specific manner. There is no central authority or third party that can alter them. 3. Speed. In traditional finance, transactions, loan approvals, and accessing deposits can be time-consuming. Traditional financial transactions may take longer to process due to intermediary involvement, manual verification processes, and legacy infrastructure. Transactions may be subject to delays, especially for cross-border or complex transactions, whereas transactions in DeFi are executed with greater speed and efficiency compared to traditional finance. Smart contracts and blockchain networks enable near-instantaneous settlement, allowing users to send and receive funds quickly. However, this makes transactions fast and easy to carry out, unlike in the CFI world where approval from a central authority or a third party is needed to validate transactions. It's important to note that cryptocurrency exchanges such as Binance, Coinbase, and Bybit do not represent the idea of DeFi. Instead, they are categorized as centralized exchanges, CEXs, acting as intermediaries or third parties. While they function similarly to banks, they offer greater flexibility. When discussing DeFi, Bitcoin often comes to mind as it was the first cryptocurrency and remains the most widely used. Its creator, known as Satoshi Nakamoto, designed Bitcoin to operate directly between equal, independent networks without any intermediaries facilitating transactions. These exchanges do not align with the ethos of DeFi and cannot be considered as such. However, they are among the top exchanges globally, trusted by millions of users, and facilitate an average of $15 billion USD in trades per day. In conclusion, DeFi empowers us with total control over our finances, significantly reduces transaction fees, and offers remarkable speed in processing transactions. We trust this video has shed light on your journey into the DeFi world, making the topic as easy to grasp as a walk in the park. We leave you with this question. Do you believe it's possible to borrow and lend money in DeFi? Share your thoughts and insights in the comment section below. We're eager to hear from you. Don't forget to subscribe for more enlightening discussions on DeFi and digital finance. Thank you for joining us, and until next time, happy exploring in the world of decentralized finance.